The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, traders. Sorry, I'm trying to find my questions panel. There it is. Wonderful Wednesday, Dennis says. I agree. It is a wonderful Wednesday. Welcome out, everybody, to the Tradespoon live trading room. Stocks and options closing bell. My name is Scott. So all of a sudden, Wednesdays, I get like a double dose. I get it. You're stuck with it, but I like it. So I was able to hang out this morning, talk about things, see if this market leads to anything. This afternoon, I'm going to say not yet. More of the same. More of the same. But at least we can work together on designing our plan, our strategies for it. So again, welcome to the Tradespoon live trading room, stocks and options, closing bell. I'm Scott. I am the head trading coach here. I have been trading for over 20 years, teaching for almost 20 years. Hello, Phil. Thank you as always. Good to see you. Here are the disclosures. Trading can be risky, options in particular. We're not advisors. This is for education. Have a plan, manage your risk, and you will be fine. Okay. Okay, it's light. Nobody wants to come in the afternoon. Institutional investors buying in bulk as home buying cools. Okay. It definitely has slowed down. I've seen it out here in Utah where I am. Markets are flat. S&P is gone. You can see it's been positive to negative, positive to negative, positive, and we're back to negative. Barely negative, but negative, 0.06% down. The Dow is hanging on to some positivity, 0.18. The NASDAQ, 0.02%, and the Russell fighting from the red is 100% flat. Oil down 2%. Stocks nudge higher as investors weigh inflation. We had PPI, which came back slightly worse than expected, but I think that's I think the market's going to be paying more attention to the CPI numbers that come out tomorrow. So that's why I don't think we have much of a reaction to this. Fed officials worried about ending inflation battle prematurely. Pepsi will be fine regardless of a recession. Yeah, people still drink Pepsi. What else? What else? What else? Yeah, that's really about it for the news. Right? That's really about it as far as the news goes. Let's look at the economic calendar for those who weren't here. So this morning we looked at the producer price index. That came in at 0.4% when we were expecting 0.2. The Fed minutes got released an hour ago. Not much impact there. Like I said, I see tomorrow morning's reports. Jobless claims still expected in the low 200s. No shift there yet. But CPI and year-over-year CPI, both regular and core, these are the numbers. I think the number today was one number, was just a little bit of a preview. These are where we're going to be looking to see, does the Fed, right? You saw the news article that talked about the Fed worrying about shutting down the inflationary combative measures early. So I don't think they're going to shut it down. I still think they are looking for a reason to taper, where we see, instead of another 0.75% for the November release, it's going to be the first week in November. I believe it's like the second or the third. So we're already like halfway there. Yeah, halfway exactly. They'll meet on the 1st and report on the 2nd. So that's 3 weeks from today. So we're halfway there. And the inflationary data tomorrow is basically going to say, can they ease up a little bit? Can they go to a 0.5 point instead of 0.75 point? And then possibly on to a 0.25 point in December. And then they take a break early 2023 to see what kind of an impact it seems to be having. So that's the big question, I think, as of right now. Someone just told me that this is being broadcast on YouTube. I thought Vlad had told me something about that. So for anyone watching on YouTube, hello, YouTubers. Good to see you. Friday of this week, still a good amount of data, right? We have retail. Are we seeing the consumers ease up a little bit without shaking it up? Consumer sentiment, what we're hoping to see is a stable retail sales. Stable meaning even if it was a little bit lighter than expected, we know we need the consumer to ease up in order for prices to ease up. If the consumer just keeps on buying, even though prices are high, then prices stay high. That's how inflation works. So we'll see what those numbers look like. Here is the predictive measures. So you can see on the SPY, the model has it predicted bullishly, but very mildly bullish. The grade is a C. And if you look here, it's like a couple of days of bounce followed by some sideways action. Not much there as far as that goes. That's the SPY. I'm going to jump straight to the diamonds, the Dow, because it has a very similar read. Also says very bullish, but the predicted pattern really only looks kind of bullish. A little bit of a bounce followed by sideways action. It's a little better grade, but still nothing too great. Then we look at the other two. We look at small caps. Small caps is bullish, also a C grade. None of them are getting scored all that well, but that's the most bullish looking. That says we may be bouncing off of this higher low to a new higher high. And lastly, we have the NASDAQ. The NASDAQ is the worst looking one. And that is negative on the range trend, also a B grade. And you can see looking to continue grinding down. From a cyclical perspective, this is where we are, right in this area here, where we tend to see it go down, up, down a little, and then bounce from there. So yeah, that's where we are right now. On the market, we're at a same low. On the cyclical analysis, it was a higher low, and that helps to usher in this fall rally. Well, we don't have a higher low. If we have it, it will be a same low. We're going to look at that here in just a minute. Okay, I can live with that. Double bottom, whatever you want to call it. Now, my preference is, of course, to be more bullish. I'll even draw this. You'll see me draw this pattern over and over again. But we have this consolidation. Is there a little bit of opening to trade here? Yeah, I would say so. The preferred model is to see it break out, which means it would take out this old high. And then on this retracement, which you can see line up very well with that higher low, that's when I would feel better. And that's when we typically see a bigger pop anyways, where we would see it pop up, then consolidate, then gives us another opportunity in here, pops up, consolidate, and another opportunity there. So even if you didn't trade bullishly now, but this happens, we would still likely have 3 more windows of bullish opportunity. 3 more windows in the vein of this cyclical pattern, right? I cut it off a little bit there, but you get the gist. Is there an opportunity now? Maybe. Depends on how aggressive you are. Depends on how willing you are to trade at or near support levels. The VIX gave us a signal late last week, right? We had the higher low and escalation signal that had me shut any remaining bullish trades and add some bearish trades. So hopefully you got some bearish trades on in advance of this drop. The sign was there, right? The VIX as a signal was there. But now we're in that same situation we find ourselves a lot. Now what? Now what? Here's the heat map. Interesting day. Energy is green. Utilities are just getting the crap kicked out of them. So we're definitely not seeing much defensiveness. In fact, we've been looking at utilities as a defensive measure. This is what utilities looks like. It's really been getting smashed. Nothing about this tells me, oh, look, it's from a sector rotation standpoint, there's not money flowing in to utilities. In fact, it's flowing out at a pretty fast rate, and it seems to be accelerating. Staples is very similar, not as weak, but it was going down, 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 and now it's kind of turning sideways. That for me is actually, if we have time here, I probably will go through the sector rotation to see, is there anything starting to stand out? Are the sectors showing us where institutions are trying to position themselves? As of right now, the answer for me has been no. There's just nothing there, unfortunately. But eventually, we should start to see money flowing somewhere. We have a little bit in financials, and we talked a little bit about credit card companies. We should look at the banks. I didn't see as much there. We looked at technology. We don't love what's going on with the chips Microsoft and Apple. Consumer cyclicals very mixed. Real estate's no good. Industrials has actually shown some signs of life, but today we're not seeing much there. So it's a very mixed bag today. Let's get a quiz. Let's look at the VIX. Let's just kind of see where all of this puts us. So again, where are we? We're at support. We're oversold at support. Does that mean it's time to buy? It means it could be time to buy. We don't have any momentum yet. There's nothing that says, look at this momentum coming in. It's not there yet. At the same time, if you're thinking of trading it, you may have to watch intraday. For me, at the very least, that's the most I would wait. I don't want to see it do something like that and then be like, all right, let's get in here. No, if that happens, I want to get in somewhere in this range here, this little teeny box that I just drew, which is marked by the highs of the last 2 days. If I'm going to do it, I want to do it in there and be in by the time it gets up there, if that's what happens. So, yeah, we do have to be thinking, is this somewhere that we trade? What do we know about the sellers? Well, we had a big candle here on pretty good volume, followed by a smaller candle with smaller volume, followed by a doji with a slight uptick in volume, but the fact that uptick in volume didn't represent any more to the downside, I would say that's just a pull between buyers and sellers. And now today, you're seeing that volume drop off. So average volume on the SPY right now, 96 million. Today's volume as of 39 minutes remaining, 56 million. So I think we're only going to end up around 0.75%. Not 0.75%, 3/4 of standard volume, average volume as of right now. But where are we? We're at support. We're getting mixed signals from the model. The model says there's a good chance that we do see a bounce from here. So what am I thinking about? I'm thinking, well, I've already closed half of the trade. Put a trade on here. That was the Thursday signal. We'll look at the VIX. I'll show you, for anyone who might have missed it, I'll show you exactly the signal that led to buying some bearishness and closing any remaining bullishness. We caught it pretty good on these first 2 days, and then by yesterday, it's slowing down, and it's like, okay. Now, some of you may have gotten out of all of your bearish trades. I only closed half. Even as of right now, there's a good chance it could just kind of smash that support level tomorrow. It seems to be at support. Why do I say it seems to be at support? Because support as a level is determined by where the sellers stop selling and the buyers start buying. And the buyers start buying. Have the sellers stopped selling? Yeah, it seems they have. Right after that first big day, came down a little bit more the next two, but not much. And now we're kind of flat. Yeah, it looks like the sellers have taken a little bit of a break. Have the buyers come in? No. So that's where we're lacking. Any trade that you decided to take here would definitely be what I would consider to be an anticipatory trade. You're anticipating that it's going to bounce off of a support level. Now, you might decide to do that simply because you're hanging on to some bearish trades and you're thinking, that's a hedge at this point, right? That would be a hedge. You're hedging. If you're bearish, adding more bearish isn't hedging more. You're bearish. You hedge bearish trades with bullish trades, just like you hedge bullish trades with a bearish trade. It's the opposite. If you're wrong about the market dropping, you're hedging your bet by buying a call that would make money if the market turned around and went up. Hedge. Okay, so let's look at this for a quiz, because everybody likes a good quiz. Just grinding it out. Grinding. Okay. I'm going to go right across the bottom here. That's for C's, maybe a little below that. And then I'm going to go across this top here. A, B, C, and the numbers are going to be 357.50, 358.75, $1.25 of width. I want some answers. Give me some answers. I want it. LK says B, staying in the middle. Bill and Phil both say C, it's going to drop. Mark, I believe, says B. Is that you, Mark, or is that Tom? Says B. I'm going to say B as well. I'm going to join the B's. Dennis is a C. Tom is a B. I mean, if you go back, you can see that this encapsulates where we've been for like 90% of today. Got a little above it here, a little above it here, a little above it here. Got a little below it here, here, a little there. B. Brad is a B. B is for Brad. Love it. Okay. Everybody's in that wants to be in. Let's see what Stella says. This will be interesting. Anybody find anything new to trade today? Hard to find something today. Okay, Stella says it's going to go up and then back down, and at 4 o'clock, it's going to close at 357.64. 357.64. That makes Stella a B. Stella is a B. Okay. Now, let's go talk about the VIX. Let's go back and make sure this is right. 357.64. Yep, it's a B. Stella joins us in the B range. Let's go. To the VIX. And let's open it up. All right. All right. All right. What do we think about this? So, where are we? Below the lowest or below the highs, but we're just kind of sideways, right? Just kind of sideways. What am I looking for here? Well, let me start by showing you the signal that we traded last week on Thursday. This here, you can see it was confirmed right there. Was a higher low. And you can see we've been having these regularly. We had one there. We had one there. We had one in here. And again over here. Every single time, these are just getting higher up. So what's one of my first concerns? If we were to drop down and only get to here and go again, I definitely think things are getting worse in that scenario, right? I definitely think things would be getting worse there. If, however, we turn from where we are now, that is a lower high. And if you look at what lower highs can do for us, let me zoom back out here. You can see we had one in here. We had one in here. And as the lower highs continue, right, those give us great opportunities for trading. So that's definitely something that I'm looking for, is to have that establish itself and give us what we're looking for. Questions or comments? All right. Well, so for me, it's not a signal today, right? It is most definitely not a signal for today. It is, however, a signal that is setting up. So as we think about that, that's what we're going to be looking for, is does it set up and ultimately confirm itself to be a valid entry? All right. All right. Let's keep going. Let's see how the watch list is shaping up. So if you do, now remember that the VIX is an inverse correlation, right? It's an inverse correlation. So whatever the direction you think that the VIX is going, it's an opposite on the other side, right? So if we think that the VIX is going to drop, that means that we think that the market is going to rise. So if you get the lower high, that is a de-escalation signal. De-escalation. Okay. Let's start with Alcoa. Oh, you can see Alcoa is having a big day, up 7% today. And that is that's a pretty good update there. I'm not sure where that would come from, 7%, but certainly it's getting it. Can I see YouTube? No, unfortunately, I am unable. If anyone is putting up comments or questions on YouTube, I apologize. I'm unfortunately unable to see those questions, to see what you're writing there. So I'm not ignoring you. I promise. I just I don't have access to it. Okay. So let's go through the list. Apple still down, but still holding support, right? We're still overall holding that support level. So there's still prospects, just nothing developing quite yet. And that's kind of where we are, is waiting to see if it is going to develop. Okay, let's look at ADI, chip stocks. I definitely want to see chip stocks hold. Right. So we'll see if the chip stocks are able to stabilize and hold and start to turn around. ADM, consumer staples. Staples still look, well, this one does at least. I still need to see if this pulls back a little bit and gives more of a setup. But I do like ADM in the way that ADM is looking. Okay. Let's keep going. AMD chip stocks. This one is no good. I wouldn't trade this one, even if it did show some signs of life. There's nothing really there that looks that good. So we'll just kind of keep on going, looking through. Amazon. So Amazon actually looks like it's maybe becoming viable. Right? There's a stabilizing and almost a turn showing up here. That looks pretty good. If you notice the do I have a turn on the stochastics? I do. It's a very subtle, but it's hooking. Let's see what the model thinks about this one. Amazon. Okay. So Stella says that it looks okay. So it's one of those that looks like it's giving a a quasi signal. It's got a bullish prediction, but it's showing a lot of sideways after the initial projection. I would say that's on the list. Amazon on the list. Absolutely. Okay, let's keep going. Let's see how many we can find that might be worth taking a peek at. Not necessarily today, but maybe today or tomorrow if we get confirmation. Sometimes I think I say, I like this, and people are like, oh, right now, and they put it on without really thinking about, the longer term, what does that look like? AXP is one that hold on. AXP, I liked. This one doesn't quite have as much of a hook, but it's very close. It is paying a dividend there, so maybe waiting for tomorrow. But I do like AXP, so I'm going to put AXP on my short list, most definitely. Okay, let's keep going. Boeing, yeah, maybe. Alibaba is a no. I don't like the Chinese stocks. Bank of America is a no. Caterpillar is interesting, right? Caterpillar has some interesting characteristics about it. Okay, let's keep looking. Oil. Now it's got to come down more. Costco, kind of flat. DBC. I like DBC, just not yet. It's close. I'd say COP and DBC, but that DBC with its natural gas component looks pretty interesting. Is this chart on TradingView or these are Thinkorswim charts? Yeah, think or swim. Here's John Deere. I think I like Caterpillar better. Okay, let's keep going. The diamonds looks bullish to me. Not a lot. It's just barely starting to turn, but there's definitely some bullishness about how it looks and if it's turned. That definitely has that going on. Someone asked about ATR. So you know what? Sorry, I don't know why. I thought I had taken care of this. Let me real quickly. I really don't use the ATR. The ATR is a volatility measure, and I use implied volatility for that measure. So it doesn't really tell me much of anything. I just tend to you know sometimes keep an eye on it, but it's average true range. When it moves on average, how much does it move? That's the question. Okay, let's keep going. Disney is at new lows. FCX, I like. I think FCX is setting up. If it can give me a trade before it gets to earnings, I think that there is something here. Before it gets to earnings, though, right? That's going to be a pretty important component of that. When does it actually show up? Okay. FXI is another Chinese stock down at new lows. Nothing there. Gold is a setup. If you have thought about gold as a defensive position, I definitely think that there is something there. Okay. Yeah, not a lot, but there's a few things. Why is implied volatility high on a stock that is down? Because implied volatility really, in fact, when we look at the VIX, we call it a fear indicator, right? It's a fear indicator. Why do we call it a fear indicator? Because it has that representation. Implied volatility tends to rise when fear is rising. So those things tend to go hand in hand. But I do think that IWM is showing some signs of life. It needs one more day to convince. Jets looks like it's trying to be more convincing. Meta does not look good. New lows. Stay away from the new lows. We don't need to trade things with new lows. Here's Marvell. Marvell is at new lows. Microsoft is at new lows. Those two by themselves make it very difficult for us to have a lot of confidence in any bullishness in the market, right? It makes it very, very difficult for us to have that confidence because those things just aren't participating, and we certainly would want them to be participating. Okay. Netflix hanging on, but not really showing much yet. Nvidia still at new lows. Q's new lows. So technology is not boding too well. Starbucks looks pretty good. Starbucks is, I would say it's somewhat viable actually. Um, yeah, I do think that there is something there. Okay, silver. I like gold better than silver right now, but this is showing some prospects. You can see the semiconductors not doing so well right now, right? They just really aren't doing very well. SPY, whoa, it's trying to hang on to some bullishness today. We're just, again, anyone who thought that today's inflation data was what we were looking for, I just don't think that's the case. I think we're certainly keeping an eye on inflation data, but I think it's going to be tomorrow's data that really helps us to understand it. Okay, Tesla is about to get kicked off the island. Tesla can't seem to figure it out. UNG is not holding up very well right now. Visa looks okay. I think I still like AXP better. The VIX is rolling over a little bit, but I think we're one more day away. So there it is. That's what I think the bottom line is we're at least a day away. There's nothing here right now that's going to be giving us signals that indicate, yeah, it's definitely time to trade a different direction. Okay, I've got some extra time. Let's go back and just kind of look at the ones that we thought were reasonable. I would say that Archer Daniels still needs a little bit of a pullback, but I like it. Amazon looks close. AXP looks close. Caterpillar, close. I like COP and DBC. I think maybe I like DBC a little better. Gold is a possibility. What did I miss? Anyone writing notes down? I think that might be it. A lot of them were definitely earlier in the list. Let's see. No. Is that it? Starbucks? Yeah, I mean, I do think Amazon has probably a decent setup, a decent look. But overall, Starbucks is on the list. Thank you. Yeah, that's probably about right. There's not a lot still. And even if we get something here, it's going to be early enough that the amount of risk that you're going to want to take should still be relatively under control. That you're not looking to take huge chunks of risk at this point all of a sudden. Yeah. Any other stocks? It got quiet on me today. How's everybody feeling? What's your overall assessment as of right now? As you are looking at the market, what's your overall assessment? What kinds of trades are you looking to put on in the next few days, if anything? Anybody going to share? I think we're close to something actually developing here. And I think a lot of people tend to lose patience right at the worst possible time. So don't let that happen to you. If you've been patient up until now, make sure you're patient going forward from now. Fred says banks look cheap. I do think that there is something developing in the financials. Maybe it hasn't given hasn't given a confirmation signal yet, but there's definitely something setting up there. We'll know better by Friday. Okay, said that's true. We definitely have to get tomorrow's information, see what that looks like and what it tells us. Bill says that he thinks it's still going down further this month. Okay. Yeah, I mean that's certainly a possibility, right? Certainly a possibility around that. Okay. Are they done being cheap? They're cheap now, but are they done? Because if they get cheaper, we're not interested, right? That's a fact. Yeah, this is definitely something that, we don't want to lose patience and make a mistake. So, know what your signals are. Have a watch list, a short list of trades that you're thinking about, that you're considering, and know what's going to kick you into the trade. Right now, we said we have a few. If we get a bounce tomorrow, I think that there is a possibility to put a couple of trades on. Whether or not you hold on to your puts, that remains to be seen. But I think the VIX is definitely going to be a great way to understand what you should be doing with it. Yeah. So any other questions about this market? We may just wrap it up a little bit early and we'll meet back up on Friday. Friday at Friday morning is our session. Friday morning session. Yeah. Okay. Whew. Have a watch list. Know which one of those are getting close on your side. We definitely want to make sure that we're not waiting too long or getting frozen by the lack of signals. Have a specific definition for what's going to get you into the trade and be ready to go as soon as you see that signal given. I'll be here with you, right? I'll be here with you. So we'll definitely be looking at it together and ready to go. But I will be back on Friday morning to wrap the week up. So we may get signals tomorrow and then have to be talking about them. We may get confirmation of those signals, though, on Friday morning. And then we'll go from there. So thank you guys very much for coming and hanging out. I'm hopeful that this market is going through a shift into a nice, steady 2 or 3 months in the same direction. That's what I think what we're all hoping for. We'll see if we get it. Enjoy the rest of your day. I will see you Friday morning. And as always, happy trading. Oh, the quiz. Woo! Sorry. The quiz. I can't believe I almost forgot the quiz. Especially because I think I maybe won. I want my gold medal. 355. Oh no, it dropped. It dropped into the C territory, 357.50. It might come back, but since I'm calling it early, C's, shiny gold medal, B's. We'll try harder next time. Enjoy your day. Be safe, be happy, and as always, happy trading.